Is the mic working? Yeah, perfect. Yeah. Good afternoon, everyone. I'm Vishal, a member of the investment team at Multicoin Capital. I've been with the fund for 3.5 years now. This year, we developed a new thesis around consumer applications of crypto, and we are excited to share with this you today. I'm also going to try something new today. For this presentation, we are not going to speak any crypto language, because eventually consumers should feel like that. All right, before we dive in, a brief disclaimer, this presentation is only for educational purposes. It's not investment, legal, or financial advice. All right, so let's get started. What do people typically think when they talk about tokenizing real-world assets? Stocks, bonds, commodities, real estate. Our view is that while it makes a ton of sense to tokenize traditional assets, that is not where eye-popping venture returns will come from. Why? Because these assets are really well served in traditional markets. Like anyone in this room right now can create a Robinhood account and trade stocks for free instantly. The comparison we make is, like about 30 years back, it made a lot of sense to put New York Times online. And we did. But we do not hear stories of VCs making incredible returns by putting newspapers online. Instead, the real venture returns came from investing in apps like Twitter, Facebook, Instagram. The true unlock of internet was peer-to-peer communication, and instantly, consumers always wanted to chat with each other instantly, but they could not. And by solving this unique problem, these apps generated massive returns. Venture returns are made when something is truly disruptive. So it naturally begs the question, like, where do we think venture returns in RWA space come from? Collectibles. Let's see how many collectors we have in the crowd. Can you please raise your hands if you or anyone you know is into collecting watches, spirits, luxury handbags, sports memorabilia, Pokemon cards, trading cards, art, whatever? There you go, quite a few. It kind of aligns with the stats. Now, but have you ever tried to sell your collection? Have you ever tried to borrow against your collection? Have you ever tried to complete your collection or find someone who is as crazy as you about your collection? Well, the odds are if you tried, the experience has not been an ideal one. We believe blockchains can make this experience better, all in terms of time, cost, and just general experience. Just as Web2 unlocked peer-to-peer instant communication, blockchains actually unlock instant peer-to-peer payments, which makes blockchains a solid foundation to build trading marketplaces, because trading at its core is an exchange of payments. Now, collecting as a consumer behavior has existed forever, yet no instant cash-settled collectibles trading marketplaces exist today at any meaningful scale. What if trading collectibles was as smooth as trading stocks on Robinhood? Okay, to give context on the size of collectibles market, 1 in 3 Americans collect, and they self-identify as collectors. eBay does over $10 billion annually in gross merchandise volume, and in the last several presentations, they have implied collectibles as a focus area. Collectibles is indeed a big business, a $500 billion business. But the fact is, the nature of collecting is changing, especially in the last decade. More people than ever are flipping collectibles. Flippers strictly want cash profits. They do not want to deal with the logistics of collecting. Flippers are trading billions of dollars of rare whiskeys, watches, trading cards in siloed chat rooms such as WhatsApp, Telegram, in internet forums on Reddit. As investors, we are genuinely excited to see our users jumping through hoops to meet their needs when a market is not providing an application for them. Now, this is the clearest signal for us that the problem is worth solving. But there's a problem. Online marketplaces for collectibles of today are not designed for trading collectibles. Let's discuss some of the problems with online marketplaces. For most categories, there is no one standardized venue like NYSE, NASDAQ, or Robinhood, where people can go and actually meet each other. Instead, the liquidity is fragmented across chats, internet forums, Facebook groups, auction houses, eBays, and etc. This liquidity fragmentation leads to poor price discovery, which leads to higher fees. This deters many collectors from actually entering the market. Furthermore, the majority of the online marketplaces today do not offer cash settlement. Instead, physical settlement is the norm and could take up to weeks. A terrible experience if you're a flipper. Let's make it more tangible. We are on 63rd Street and Park Avenue right now. If we were to walk 15 minutes south in that direction, we will hit Diamond District in Midtown Manhattan. My colleague Eli and I walked down there to understand how watches are being traded today in the market. The dealer told us that there is like about a chat of about 500 watch dealers in America who are in like a chat group, and this entire thing is based on mutual trust. You can walk in, buy a watch from them, and cross the street and go lend it to the other guy and borrow against it. But if any of the dealers in this ecosystem abuse the trust, they will be blacklisted from that watch chat, and they cannot do business in the US anymore. I mean, the year is 2024. We are talking about AGI and about like sending reusable rockets to Mars. Watch trading can definitely use some makeover here. Financial and market structure considerations aside for a second, what do you as a collector do once you have the collectible? How do you store it? Where do you store it? Like, flippers, we understand, do not want custody. But even as collectors, you very quickly get restricted by the physics or chemistry of taking care of the collectible. Like, how many antiques or expensive wine or fine art can you actually store in a condo in Manhattan? Not many. You'll be kicked out if you did. But lastly, fraud is also a very big problem. Fraud plagues basically almost all collectibles categories, especially the ones which are traded in broken, like siloed chats and groups that we talked about before. So what can we do about it? We believe blockchain-enabled collectibles marketplaces, what we call BECMs, represent the next evolution of online marketplaces for collectibles. What is a BECM? A BECM custodies collectibles, guarantees authenticity, provides one-click redemption, and most importantly, provides instant cash-settled trading experience for collectibles. We can provide instant cash-settled collectibles trading experience if and only if we can transfer the ownership instantly and settle the payment leg instantly. And BECMs leverage 3 core crypto technologies to do that. BECMs use stablecoins to settle global payments instantly. They tokenize collectibles to transfer ownership instantly. And they tap into permissionless markets of crypto and allow for global liquidity for trading and borrowing. We believe BECMs will be as massive as DTCC was for equities trading. Only with the advent of DTCC and brokerages could independent traders trade stocks from anywhere instantly. And that led to a huge surge in trading volumes and democratized trading. By this, BECMs actually create a solid foundation for flipping collectibles. By unifying market liquidity, BECMs will improve price discovery and lower fees. By custodying collectibles, BECMs will change the equation from how much can you store to how much can you buy. By guaranteeing authenticity, BECMs will build trust in the marketplace. It severely is like in short supply right now. And lastly, we cannot emphasize this point enough. Instant trading is a killer feature. And every single feature I just discussed on this slide will attract more traders and collectors to collecting. Well, so having established the case for why BECMs, we as investors think deeply about what BECMs will actually generate returns for our investors. Not all BECMs will be venture investable, so we share a few factors. These factors are split across 3 main axes: emotional axis, physical axis, and financial axis. So let's start with the emotional axis. Because first and foremost, collecting is a very emotional activity. Like if a collectibles category does not have people who will just argue, debate, discuss for countless number of hours about their collectibles online, the collectibles category will fail to capture attention. You fail to capture attention, there is no cultural relevance. If you don't have cultural relevance, the objects are not worth collecting, and there is no thriving marketplace for collectibles. Now, you can think of Pokemon versus, say, plastic cups. I personally don't think or know millions of people on the internet will care about fighting and arguing about the design of plastic cups. But for Pokemon, I think there's a huge community. Now, a passionate community is necessary, but not sufficient. This brings me to the logistics of collecting. We believe harder the logistics of collecting, the stronger the case for BECMs. Imagine if you wanted to flip wine across the globe. That is not something that exists today. Either the wine will get destroyed in the transit, or the economics of it will not make it consumer scale. But with BECMs for wine, anyone can instantly trade wine without it leaving the temperature-controlled vault. Finally, there are a couple of things on the financial market structure side as well. If the current market structure is good, then it's going to be hard for BECMs to disrupt that. But the more broken the market structure is today, easier and stronger the case for BECMs to come. For example, StockX has done a good job of consolidating liquidity for sneakers. But like watches and whiskeys are still trading in tens of billions of dollars across all these disparate venues that we talked about before. And lastly, we believe there is a sweet spot in the price of collectibles for a BECM to actually become venture scale. Prices should be high enough to impart some kind of social status to the collector and buyer. But they should be low enough to attract many, many more people to collecting, and thus democratizing collecting. For example, we all can agree that many, many more people every year buy and sell luxury handbags than they buy and sell Ferraris. This would make a case for BECMs for luxury handbags as a VC investable category versus maybe not for supercars. Now, an important and tough question for venture investing is, why now? In investing, there is no difference between being early and right and being wrong. We believe that the progress in abstracting crypto features, stablecoins, and tokenization makes this the right time for BECMs to take off. Most collectors are not crypto natives. They will not be crypto natives. So that means to onboard them to BECMs, excellent user experience is a must. Only in the last year or so have we started seeing glimpses of wallets using features like social logins, login with your Google account, biometrics, passkeys, thus abstracting away all the seed phrases kind of nonsense for normal people. The experience of using stablecoins has vastly improved in 2024. Polymarket was a good example for that. Also, different payment methods like credit cards, debit cards, Venmo, etc., all getting integrated into crypto applications. And lastly, we all expect better regulations next year, and with better regulations, more tokenization will happen, and we believe collectibles are a category that will tokenize faster than regulated asset classes. Also, in the long term, there is a lot to be excited about BECMs. I will touch upon two parts of it, for financial and collector. On the financial side, with liquid price feeds, collectors will be able to borrow against their collections by tapping into global liquidity on DeFi. And as more collectibles come on-chain, collecting will get financialized. It will set the foundation for these collectibles to be included in baskets and indices, which eventually paves the path to institutionalization of collectibles as a legitimate alternative asset class. On the social side, there's a rich design space. BECMs will allow their users to showcase their interests and collections. Anyone can follow them, like their collection, share and comment on their collection, place a bid directly from the user experience, from the UI for their collections. BECMs will organize global collector events where you can meet people who are as crazy as you are about a specific collectibles category. And this experience for sure will be 10 to 100x times better than what it is today. And these social connections will also add to the network effects of BECMs in the long run. Now, BECMs will be TAM expansionary. In the history of the internet, whenever an internet-native business has displaced a legacy media or legacy business, it has consequently also increased the market size. Facebook, YouTube, Google, Uber, these are all classic examples. We believe BECMs, with their instant cash-settled collectibles trading experience, will make trading collectibles feel like trading stocks on Robinhood and consequently increase the market size of collecting. So to bring it all together, if you want to take away one paragraph from this presentation, in summary, we discussed crypto is primarily a value exchange technology. Traditional asset classes have been really well served, but physical collectibles reminds you of the broken infrastructure that the old Wall Street had before electronic trading actually took off. We also said the killer feature of BECMs is instant cash settled trading. And we also discussed several factors that make these BECMs venture investable. And finally, successful BECMs will financialize collecting and expand the overall market. I want to give a huge shout out to my colleague Eli, who also spent a ton of time this year building this thesis, and would now make my way for Baxis, a true BECM for whiskey. And it's a portfolio company of ours. And thank you all for listening.